And of course, how will the Fed and the White House handle all of this indignation over inflation? Joining me now is former investment banker and War on Small Business author Carol Roth and the Expert Press CEO Dave Maney. Carol, I want to go ahead and start with you because I watched that speech on Friday from California. The president, it was a doozy of a speech is the best way that I really could put it. But I think Bret Baier said it very well when he said the president keeps getting up to the podium and essentially appears more and more disconnected from reality with every day that passes. He continues to blame the inflation problem on Vladimir Putin when it started much longer before Russia's invasion of Ukraine. It actually started with the president's inauguration.
Yeah, I mean, we saw a record high, 40-year record high on inflation in January, way before we had anything that had to do with Russia, Ukraine on the record. And it's really frustrating, Jackie, because, normally, I'm a Milton Friedman fan. I understand monetary policy and its effect on inflation. But given the supply constraints we've had, given the fact that they tried to power cycle this economy, the president actually holds the cards here. If he did a 180 on energy policy, that is the way that we are going to bring inflation down. It would send a signal to the market in the short term. It would shore up long-term economic and national security. Unfortunately, that's the one thing that can save us, and that's the last thing he's probably likely to do.
It is the last thing he's likely to do. In fact, he wants to take a trip to Saudi Arabia to try to coerce the Saudis and OPEC to pump a little bit more oil to help us out here. But Dave, I want to get your thoughts on the Fed and its role in all of this. I mean, to me, it feels like the Biden administration has essentially dumped this massive problem in Jerome Powell's lap at this point. A half a point hike on Wednesday after the previous half a point hike, the market might have priced that in. But if Jerome Powell needs to act more swiftly, which is what the inflation numbers are saying to this market, why we sold off Friday, why we're selling off today, the picture could be a lot uglier. What do you think is going to happen?
It's hard to say. I mean, we're clearly in for raises and more raises. There was a great line. I was looking at an old government report about how the government handled the post-war inflation from World War II. And there was a line in it. It was a backward-looking analysis. And they said the problem is that the government is using heavy artillery to try to swat flies. That essentially this problem is not one that you can really address subtly. And so you just use these massive tools that can obviously go too far or explode in the wrong directions. And so I think this thing of what is the exact quarter point difference it's going to make? It's like in the end, it's going to be human beings based on imperfect information guessing. And I think that's all any of us could do right now is guess whether it's a half point or 3/4.
And Carol, back to you, because if you think a recession is coming down the pike, there are many who believe we're in a recession right now. I mean, whether it's a half a point or 3/4 of a point, as Dave is pointing out, and this continues to go on for 10 more meetings to really try to tame this inflation. The worry, as Mark Tepper put it before, of the market essentially is that inflation isn't going to be slammed down to that 2% level. We're going to still be living with elevated inflation for quite some time, and that really has an impact on the average American.
Yeah, I mean, I think that is, sort of the foundation of the issue here. The Fed has a bunch of tools to tamp down demand, but we are supply constrained pretty much everywhere in the economy. We're supply constrained in labor, in food, in housing, in energy, and in commodities. And so the only way using these, quote unquote tools that you can kind of close that gap is with utter carnage. And then, like you said, we still may not see, that inflation going down right away. So it's a very ugly position to be in. And unfortunately, the tools that are out there, the heavy artillery that David just alluded to, isn't the right kind of thing to get this done.
Yeah, and Dave, you look at the markets today, down 720 points. The Dow is off its session lows, but this is still setting up to be a pretty brutal day for the stock market after a brutal day on Friday. If you look at the markets year to date, the picture is brutal as well. Somebody on our show said to me this morning, I hope that this is the end of it. Unfortunately, I think this is just the beginning. I wonder what you think.
Well, once again, I mean, if I had that perfect crystal ball, I'd probably be in a different place in time. I do think that suggestion of kind of looking at it and saying what would actually kind of reverse it right now would be something that's probably almost certainly not going to happen. But imagine the power of a President Biden saying, look, we have these environmental goals, but people are suffering. The poorest people, my core voters, are suffering. And we are going to have to delay the implementation of this aggressive green agenda. And here's what we're going to do instead. It's better than me going and asking bad actors in Saudi Arabia and Venezuela to do more to hurt the environment over there. The signal of that and the power of that would probably snap us out of much of the current distress.
Yeah.
And it's amazing that there's no possible way that that's going to happen.
I hear you. I don't think he's going to do that. And even if he did do that, we've lost a year and a half of investment and traction, right? There's a lag time before you actually see an impact. And so that really is a massive issue as well. We let it go so long that we've dug ourselves into a hole. Carol, Dave, great to see you both. You'll be back later.